So Mike Begg here from Beat the Bank. So probably a little bit of a recap of what we went over in the first episode. How did we first become aware of that scandal? Or the scandal that we've uncovered gradually over the last 18 months to 2 years. The background is that we saw a huge amount of transfers all over Scotland, people moving from final salary pensions to personal pensions, and the firm that were behind a huge amount of that advice was a firm called the Independent Benefit Consultancy in Glasgow. That firm is now in liquidation, having their FCA permissions previously being removed by the regulator. That firm is also in liquidation. Liquidation is probably due to end soon. And over a number of years, we have dealt very, very closely with the various liquidators and recovered huge amount of data in respect of these pension transfers, which were all over Scotland. So, from Aberdeen, Montrose, all the way down to the Glasgow area, Ayrshire. And then what it led us to was the fact that, rather bizarrely, and this should never, ever, ever happen, to be clear, is that masses, as many as hundreds, had been moved out of their final salary pension schemes from Alloa and a small area around it. So what we're talking about is people who maybe had their final salary pensions with the likes of Diageo, United Glass, Metal Box, Scottish Amicable, and these people have seen their pensions moved, might be to, for example, Prudential, Old Mutual, but then moved again to True Potential. And we simply couldn't comprehend the sheer number of people that have been moved out of final salary pensions, bearing in mind the regulator has always said, that the opening position of a final salary pension transfer is it's a bad idea. Yet, when we spoke to these people, they'd never been told that. They'd never been told why they shouldn't move. They'd only been told why you should move. But of course, that made advisors very, very wealthy. But then, when we looked at it again, we simply were astounded, to be perfectly honest, by the number of people who had their pensions moved, but yet again to True Potential. And we thought, why? And then that led us to investigate more, which Craig will tell you a little bit about it.
Yeah, True Potential wasn't a name that really was on our radar not until about 2 years ago. And then we're coming across more and more cases where the clients ended up at True Potential. And it just kind of set the alarm bells ringing slightly. And we've investigated and had a look at a lot of clients' cases. And True Potential, relatively newish company in financial services terms, and obviously what they were looking to do was obviously to get money under management. And the way they were doing that was basically to incentivise advisors to bring their clients over to True Potential. What we've tended to find is that most people, funds that got moved to True Potential, as Mike touched on earlier on, they've already had the big company pension transfer carried out. That's already been done. So it's been done to go to Prudential or Old Mutual or Standard Life or whoever. So the money is, in effect, basically a pot of money with these companies. So from True Potential's point of view, there's really not any risk there. It's really a case of bringing one pot of money from one company over to another pot of money, to another pension with them. There's no risk for any poor previous advice that's been given regarding the ongoing regarding the company pension. So they're looking to grow. They're looking to target financial advisors, basically dangling a carrot regarding, are you looking to retire? How are you going to exit your business, etc., etc. So this is what they were trying to get the advisors to look to do. Right. So, but I think that can be fair
absolutely
comment, Mike.
I mean, in terms of what did True Potential do wrong, well, I think the financial regulator in the UK, the FCA, came out with a statement about what we call consolidators, of which True Potential is one. So in other words, retiring advisors have gone there, lots of customers onboarded into True Potential. And the regulator was very clear in that statement, and they said that, look, we have a problem, or have identified a problem, when people are incentivized to move into the company's own products. So in other words, in the case of True Potential, moved into True Potential's in-house offering. We have a problem when people are financially incentivized to do that, was what the FCA were saying. Now, when we mean financially incentivized, it's been well published, it's not for us to say, there's many press articles out there. We've spoken to many people who were looking to join True Potential, didn't in didn't like the proposal because of all that involved, and particularly the fact that advisors were picking up massive commissions by moving people into true potential funds, as much as up to 8% of what was moved into true potential funds, or even more than that. And obviously, if you're going to talk to someone about moving their pension, you have to put them in possession of all the facts about why you're recommending they move. But, within that process, equally, you cannot not tell them that you're benefiting substantially from a commission that's paid to you, the advisor, if you recommend them to move to true potential funds. Now, so for example, if someone moves a pot of, say £500,000, which is not that unusual, the advisor may have picked up as much as £40,000 or even more for that transfer. And, in questions of what did True Potential do wrong, well, we think it's wrong to incentivise advisors, but certainly it's wrong to not tell clients that they're incentivised, because that doesn't put the clients in possession of all the facts about.
Well, they can't make an informed decision.
No, they can't make it. That's what the rules say. You have to put the client in a position whereby you give them enough evidence to make what's known as an informed decision. Well, if you're going to tell or not tell your client that you're going to pick up a substantial commission, that would have clearly influenced someone's decision as to whether to proceed or not. And as we said,
100%.
In an earlier episode, that and clients have said, well, if I'd known that, I would have shown the advisor the door. Well, maybe not quite in so many words, but that's kind of the gist of what they said. And so the sheer numbers that have been moved across, we don't think it's right. We don't think it's right that people haven't been told about the commission. And certainly what we don't think is right, is the manner in how these transfers have happened. And we can prove it from clients' files. That'd be fair to say.
Yeah, you would say that how the clients have been onboarded to True Potential is advisors being advisors, if they can work out a short circuit or a way to get things done without having to follow all the rules and regulations, it's human nature, they'll do that. And that's tended to be what we found regarding how people have ended up at True Potential, not even having to sign any application forms or documents to agree to the transfer. It's all apparently been electronically signed. So in a way, well, without in a way, the advisor can actually move the whole thing to True Potential without really the client's agreement. To be simple, to say that. What would also say what the thing that really is quite annoying from a client's point of view, from people we've spoken to, is they've had relationships with these financial advisors for many years previous to it. So they trusted them. They took advice from them before. They've dealt with them. They've paid them annual fees every year for the advice that they've been given. And basically, they've been abandoned. That's brutally what we're speaking about here. They've been moved to True Potential, and the financial advisor has basically disappeared into the sunset, within a few months. And these clients have been abandoned, orphaned, as you would say. Their pensions now with True Potential. They don't have a designated person to speak to, a financial advisor anymore. If they're dealing with True Potential, it's the telephone team that they'll speak to, and the financial advisor team at True Potential again. So every time they want to speak to somebody, it's somebody different they're going to be speaking to. They're going to be paying an ongoing fee, advice fee as normal. But in a way, and a lot of the times True Potential haven't spoken to a lot of these clients as well. So the power of the money of the pension fund is basically kind of in the hands of the client, so they can go onto their app and they can look to see what the balance of their pension was. And to a lot of them, it's big money, that's sitting there, and it's very tempting for them to access the money and take loads of money out for different things. And that's not how the pension was meant to be. If they were advised properly by an advisor, they wouldn't be nuking their funds the way we've seen with some of these people. And some of these people, have had pension pots, £400,000, £500,000, and they've totally exhausted the fund. They've taken the whole lot out, for things which they shouldn't really be taking money out on. But as well as that, they've been absolutely hammered for tax for the payments for taking the money out of their pensions. Yeah. And they're not aware of that. They're just going ahead and doing it. But somebody should basically be speaking to them and saying, look, no, you shouldn't be doing that.
Because the problem is that True Potential say you can speak to an advisor And obviously that takes longer, or that could be you have to wait a while to see and talk to an advisor. Or what you can do is go down the non-advised route. And if people are thinking, great, I can take money out and no one's going to give me any advice, well, I'll just go and take money out. But the problem is that the rules say you're only allowed, to take, or the recommended safe limits are 4 to 4.5% from your pension every year. We see some people with true potential that have taken in excess of 30% out of their pension in a year, and true potential haven't been on the phone to them and say, guys, wait a minute here, we've got a problem here.
Yeah.
Be fair to say?
Yeah, 100%.
So, in terms of, a few case studies about what's happened, I think it's probably important for people to understand how you got to true potential. So there are two ways to get to true potential, apart from you obviously going to true potential yourself, and these are the advised sale, or these are what's called the direct offer. Now, my understanding is the direct offer stopped in probably mid-2024, or perhaps slightly before or after that. So in terms of an advised sale, your advisor suddenly out of the blue comes along and sees you, says that he's retiring and moving everyone to true potential. And then really without you knowing much more, and with certainly a huge number of flaws we can identify in that transfer, factually, people are then transferred to true potential. The advisor departs into the sunset, and perhaps the company that they previously had, they then just voluntarily dissolve. In terms of it being a direct offer, what's happened is that people right out of the blue have received a direct offer from True Potential saying transfer your pension to us. Now, that breaches, we believe, we've taken legal advice, we believe that breaches a lot of regulation. Certainly breaches data protection, but also breaches a thing called PECR. And you're giving people a financial advertisement to move their pension. And we've seen people's pension moved and not really understanding why they've been moved. And to be clear, if it's a direct offer, the advisor should have no involvement in that whatsoever. They're not allowed to have any involvement. But we've seen people moved by direct offers who've been down to the advisor's office to complete the process, or the advisor has chatted with them over the phone to complete the process. So it's absolutely not being a non-advised sale, it's being an advised sale. But the whole point of the matter behind this is that what we've seen is advisors walk away with huge amounts of money, millions of pounds, for transferring people into True Potential. And what we've seen, as Craig was saying, is clients who suddenly were able to speak to someone, suddenly they're finding it difficult to speak to someone. A lot of them don't like to be on the phone. They want to see the face-to-face.
100%.
And these people have then, absolutely devoured their pension fund to the point that these people are going to run out of money, or already have run out of money.
100%, yeah.
And that is a tragic situation that's been allowed to happen without having the appropriate systems and controls to stop it.
Place, yeah.
Yeah, would you agree?
I think True Potential, obviously what we've seen from them onboarding clients, they were growing extremely fast, and it looks as though they didn't have the systems and controls in place to actually monitor the growth level that they were having. They were dangling a carrot in front of the financial advisors to get money on board, basically on the books, and that seems to be the top priority for them.
As we were saying earlier on, just very quickly, the FCA did a commentary at the end of October 2025 about consolidators, of which True Potential are one, because retiring advisors go in there, bringing their funds in there. And the FCA were really critical, saying that, look, and two significant things. It's a problem if you are incentivizing your advisors, your authorised advisors, to go into groups' own funds. So in True Potential's case, True Potential's own funds, their in-house offering. So that's one thing. But the other thing the regulator was very clear on was that if you're growing exponentially, which True Potential without question have done, it has to be controlled, heavily controlled. You have to watch that advisors doing everything correctly, that things are happening in an appropriate and appropriately regulated manner. And frankly, that's not what we see, is it?
No, not at all. And it's crystal clear from what we can see from the files and the information that we can glean from it. It's just not, the controls were just not there to regulate the volume of business that was coming in. Particularly as well when they're saying, regarding clients signing application forms, etc. Oh, or originally when things were initially set up, they didn't record that information, or they didn't have that, store that information, etc. This is sort of bread and butter stuff that should be there. When we're out speaking to clients, it is actually making them, once we explain what's been going on regarding true potential and obviously what's happened to their pension, etc. A lot of them are very angry with what's gone on, and particularly with the advisor that they trusted and they've dealt with for many years beforehand. They thought they had their back. And obviously they've not had their back. They're really only mainly interested in what's in it for them at the end of the day. So there is a, as I said in the earlier episode, there from our point of view, it's very, when we're speaking to clients initially, it really is about building up trust and explaining what we do, and taking it very, very gently with them. And building up rapport and building up a trust. A lot of times it's crazy, but they kind of think, we're the bad guys here, which we're not. We're the cowboys with the white hats. We're not the cowboys with the black hats. And it's building up that trust, going out to see them. And there's the amount of customers I've been out to see 3 or 4 times. It's, I'm getting to know Iowa really, really well, and Stirling. I think getting a holiday home down there. I've been down there that often.
It's like, in terms of how did we want to take this on, it's because what we hate is injustice. And that's what we've been fighting since 2011. We hate injustice when things happen to people that impacts on them financially, which really shouldn't have been allowed to happen. And we're highly forensic, and we have been highly forensic for years and years and years.
It's thinking out of the box a lot of time. It's very sitting going through clients. To potential portals, looking at their documents and their secure messages, which is nobody else does. Nobody else even thinks of doing regarding that. And obviously, you're comparing their outgoings to the bank statements and all that type of stuff as well. So it's really trying to build a watertight case as what we can for people to put them in the best position to claim.
I think it's why did we take it on as well? Is look, we're like a dog with a bone, and we've always been like that. And just very, very quickly, in terms of when you had lots of people getting involved with PPI, we were right at the forefront, but we did it differently from everybody else. We recovered a huge amount of data to put claims in for people, and then you'd see advertisements by solicitors or claims firms that were saying, we've had 50 grand for this person. That I think the most we had for somebody was nearly 280,000, because we're forensic, we're deeply forensic, we recover lots of files, we actually enjoy it, and because of our backgrounds, it means that we can forensically go through things. And like Craig was saying, we'll even, to disprove something that's on a suitability report, we'll go through people's bank statements. We'll break it down, and we know what we're looking for. And on that basis, for us, it's enjoyable, because we want to crack the case, if you like. So that's why, we've done it. In terms of, why we think we're the best people to for you to talk to, is because simply, as Craig's been saying, as I've been saying, is that, look, we've been at this for nearly 2 years, studying in depth exactly what's going on, and Craig's been out to see many, many people. We've jointly spoke to God knows how many people to build up an exact picture, but an exact picture built on reviewing files that may contain thousands of pages. So we absolutely know inside out what's happened, and we don't think nobody can really be bothered going to forensic detail that we do, because we think it's very, very important. If you're going to complain about something, you have to give that complaint the best chance, absolutely the best chance you can. Doesn't matter how long it takes you. And that's why for clients, when we're putting claims in, we will cover multiple files. And when I say multiple files, we're literally talking about thousands of pages of data, which we go through to then establish what we believe to be the case. And it's pretty horrific what we uncover.
Yeah, but as well as that, Mike, it's been honest and trustworthy with people as well, which is our main thing. Obviously, if we're speaking to a client and we honestly don't think there's a claim there, we'll tell them that.
Yeah, we're not going to waste their time, our time. That's it.
We'd rather manage people's expectations. And I say to everybody, just because somebody they may know may have had a successful claim, that we've managed to facilitate for them. It doesn't mean to say it's going to be the same for yourself. You know, everybody's pension is different. What people have done to their pensions is different. The size, the amounts, etc., etc. Their journey there could be different things in there. So again, it's managing people's expectations, but we get the trust for that, and we get the respect from the clients by doing that, and basically keeping them up to date with what's going on. And end of the day, we're getting results. So that's the proof of the pudding's in the eating, and we are getting results from True Potential regarding, you know, how people's pensions have been moved, and how they've been onboarded, and the you know, sort of misadvice that they've been given. So
yeah, and I think the most important thing is the proof's in the pudding, and we've now been receiving substantial offers from True Potential and prospective clients. Even after paying our bill, clients have been left with thousands, in some case tens of thousands in compensation, because of what we've been able to achieve, because we've been able to prove that in essence they've been missold.
Yeah, and the good news story on that is, for these people, the money that they're getting back is a kind of life-changing kind of money. We've spoken to a whole range of different people. Obviously, what they can do, they can pay some debts off with it. They can make their life more comfortable. Bear in mind, these people are, you know, 60 plus age-wise. They've retired. Yeah. They're using their pensions for trying to live on. So a lump sum of money basically into their bank account basically takes the pressure off. Can change basically their lifestyle. If they've got health issues, if they've got anything else going on, it just takes the pressure away. So really, all we would say is that, obviously, you know, I say to everybody, look, you have to scratch your itch. If you think any of what we're speaking about here regarding you're at True Potential, your advisor's retired, you've been moved, etc., etc., you need to scratch your itch. You need to find out, you know, does this relate to me? At the end of the day, you know, it's not going to cost you anything for asking and finding out.
No, absolutely. I think what Craig's saying is right enough. That, look, if we think that an advisor has done the job properly, we'll tell you. We're not in the business of saying something to be true that isn't true. And so for us, it's all about establishing, if we believe from all the file information we recover, you know, we're talking thousands of pages, lots of phone calls, etc., etc. If we believe you've been inappropriately advised, well, yeah, we'll take your case forward. And as I say, look, our clients already have this, you know, have received thousands in compensation, in some cases tens of thousands in compensation after paying our bills. So hopefully that's given you enough knowledge that you might want to tune again in for the next episode.